The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we headed into the weekend on Friday, it was a rough day in the stock market. Mixed action in corn. Beans ended up a little bit higher, finishing at the highs of the day. Pressure in wheat, pressure in livestock, gold on a tear. A lot to unpack here as we are getting close to flipping the calendar to the month of April. We got USDA reports, tariffs, and more in front of us here in this upcoming week. Let's talk markets with Tommy Grisafi from Nesvik Trading and Ag Bull Media. Tommy, how are you, buddy? Hope
I'm laughing. I'm doing well. Did you just read all that off a teleprompter, or was that in that head of yours?
Most of it was in my head, a little bit from a computer screen. So,
oh my God, that was a mouthful. Let's go. Is this a 2-hour show? How long do we have?
I was going to say, we got about 10, 11 minutes here to talk through what's happening in the markets. And man, oh man, I want to start. I want perspective from you on the macro side, because what a tough day in stocks. Gold shooting higher again. We saw that Michigan Consumer Sentiment Index came in much lower than expected. Just a lot of uncertainty in that broader economy picture. Seemed like it weighed on the stocks and the macros on Friday, Tommy.
Yeah, absolutely. Let's start with gold. That's an easy one. All-time highs. Just look for, we recorded up $25. Call it $3,100 an ounce. I think it's like $3,088, but $3,100, close enough math. New all-time highs for gold. There are some big gold bugs out there who are really loving this move. Flip it to the other side, the digital gold. Bitcoin down 3,000 right now. It doesn't like when the stock market has these bad days. When money comes out of the markets, Bitcoin says, you know what, maybe we're a little too speculative. Stock market. It's really simple. It doesn't need to be a long conversation. The Trump administration is willing to hurt the American economy to fix it in their eyes. Now, some of your viewers and guests might be like, what do you mean? If you're out there and you're getting ready to retire in a year, you might be upset if you hear the Dow Jones or the stock market's down 5-10% in a year. But if you keep your money in the stock market over 30 years, these little 5, 10, 20% moves, not that 20% is little, but the markets tend to come back. 5 years ago today, we were in the heat of canceling spring break, and the Dow Jones was going down 2,000-3,000 points a day. We went from 30,000 to 16. We're at 42,000 in the Dow. Calm down, people. You're all going to be able to retire, but you might have to work 6 months or a year extra. They're cutting back spending because we're spending money. Your tax dollars, the listener, Jesse Allen's tax dollars, my tax dollars, we're spending money on stupid stuff. And so Doge is trying to get that to stop. With that, they're cutting jobs. They're eliminating jobs. Did you see the ag secretary? She got aggressive this week on her thoughts of the past administration and the silly things they were spending on. She said at this administration, there's no room for this, and this. You know, all the hot topics and all those, DEI and this. And I saw she threw out tomato seeds, right? Well, they're doing it. They're not talking about doing it. They're doing it. Not to mention, President Trump had spoke to Canada's new guy. Do you know his name off chance?
Mark Carney.
Thank you. They said they had a nice conversation and that he'd probably still have tariffs on April 2nd for Canada, but they had a nice conversation and he felt like they were moving forward. So it looks like tariffs are coming April 2nd. Stock market's taking a step back. That's just where we are today. And with that, gold's out there going, oh boy, this is different. We have a weaker dollar some days, and that's affecting some commodities. And that's the outside markets.
Well, I wonder, I'll segue into livestock before we talk grains. Stocks and livestock have tended to kind of move together here in the last several months, and even traditionally, really. I have to wonder if such a big down day in the stocks contributed to a somewhat lower day in the protein sector on Friday, Tommy.
Yeah, I believe we had March feeder cattle expire, and they held in there real good to the end. Twice this week, one day being yesterday, Thursday, we had a vicious sell-off. Feeders were down $4, closed up $1.50 yesterday. They closed down $1.50 today. They gave back yesterday's move, but cattle ripping off the bear's head. I know people who got bearish, put some aggressive stuff on, started high-fiving. They're like, cattle are down 200-300. Boom, cattle up 200 yesterday. Ripping off heads, more margin calls to be made. Cattle market's on fire. If you own the physical animal, you're sitting good, but you haven't sold it yet. And if you haven't bought LRP, you don't have a put or rolling up a put, or if you're scared to sell futures, we take a few dollars off and a few more. In 5 days of that, we take $10 off the cattle market. Won't take too long till you hear cattle folks in trouble. Now, right now, they seem to be doing okay, but if they continue to buy cattle at all-time highs, this could get really wild. Now, there's something else we got to talk about in cattle that could really rock this market this year. Well, two things I want to talk about, very serious. The drought monitor map, there's a lot of drought, and you know how cattle move all around. Three things. I'm going to take that back. Three things. I got to go back to my intro. Three things about cattle. The drought map, we're not importing from Canada and Mexico very much. We're all types of challenges there with tariffs, and we used to import a lot of cattle from Mexico. We had the screw worm. That seems like we've gotten past that, but now we got tariffs. We're kind of fighting, or we are fighting with Canada. And then the third thing was, I hear if DOGE starts to really get aggressive with exporting people, that the livestock industry is going to have to go to the Trump administration and say, hold on a second. If you deport these people in this town, we're going to have to shut down production. That has been quietly whispered about. I don't know if people are talking about it out in public, but you mark my words that the big packers are going to have to go to D.C. and say, do not come through XYZ towns with a bus and take people away. There won't be pork and beef on the stores. We will shut down. They'll have no choice. So we could have like a COVID type moment where only the factories have half the workers. And I heard it from three different sources, and they weren't all talking to each other. These are people very dialed into the cattle industry. Now, do you want to go on national TV and talk about that? This is how America works. I mean, if you have hard jobs, oftentimes are done by people who don't, typical Americans don't want to do them, right? And so we have people come to this country who are willing to work. We need to get them in the system legally here and say, nope, they're here, they're working. My clients in North Dakota, I've called a lot of them. I said, did you get your workers from South Africa? Yes. Now that's on a different program, but keep an eye out for a headline. If you want to know what could kill the cattle market, if you hear factories or production slowing down, that would definitely calm things down, Jess.
Well, we could talk H-2A labor program. That's something I know is tied in with all of that. We could spend an hour on all of that, Tommy, but we should talk the grains before we wrap up today. And I'll ask it to you this way. It feels like that these grain markets, for the most part, have been marking time until we gear up for these USDA numbers, acreage, grain stocks, tariffs, and more. There's going to be a lot that is thrown at the grain complex here upcoming this week in front of us. I mean, what would you say about the grain trade, and what would you remind folks as we gear up for all of this data and news to get thrown at the grain trade?
Great question. If it looks like corn's really profitable and beans aren't profitable, if you don't have your corn sold and protected, it's not nearly as profitable as you think compared to what it did in the last few days. So in the last few days, as we've noticed, no beans closed on the highs today, up 8. They were up 15 yesterday. The corn bean spread, Karen Braun from Reuters, been putting out a lot of charts about corn bean ratio. It's correcting itself. So all the people are like, I'm going to go plant corn. I bought fertilizer. They might not have sold corn when it was up to 460, 470, 480. We do have the 470 crop insurance level. So 3 months from now, I think the corn bean spread could be at a much different level. Mother Nature might have something to do with that. Expect volatility on Monday, but after that report's over, watch out for ending stocks. Like a lot of people say the corn number is a lot tighter than we think. So we could have a bearish acres number and a bullish ending stocks. We could have vice versa. We could have a really bullish number on Monday in corn. If the whisper number for corn now is 95, 96, 97 million acres, what if it's just 94.2? And the ending stocks are tight? Add a drought map to that and some heat, we could have a bull market. And the USDA keeps projecting that we're going to have a 183 yield. We've never had a 183 yield. Never. We keep coming in at 179, 178. They always shoot big, and then we go from there.
That's a good thought. And at the end of the day, I'll just say this as we kind of close it out, Tommy. Whatever the numbers are from USDA, we'll get them, we'll trade them. then we'll start focusing back on weather and tariffs and more. And to your point, you mentioned Mother Nature is going to have a lot to say over the next several months that could change the dynamics in these markets completely, right?
Yeah. Real quick before we go, right after we get done with this show, it's going to come out what the funds are. I'm going to predict, and by the time your viewers and listeners are watching and listening to this, the funds are barely long any corn. After that down 9 in corn today to up 3, I bet you the funds are only long 25,000 corn. So the one of, if not the biggest report of the year, 6 months ago, the funds were short 350,000 corn. They went to long 350. They're about flat now. So we got a lot of room for them to pivot to either go short, to get long, to move this market. But I remind everyone, when the funds are buying and you hear the funds are long 350, you need to be a seller and protector at those levels. That funds buying that gave you the opportunity to sell old crop. We're going to need them to buy again, or weather problem to sell new crop. Thanks, Jess.
You bet. Tommy, real quick, folks want to reach out to you at Nesvik Trading and Ag Bull Media for a conversation. How can they reach you?
Yeah, if they're ever in Nashville, give us a call. We had several clients up to the office, up to Nesvik Trading this week. Of course, go to the Ag Bull website, www.agbull.com, and get a QR code. That is my personal information. Give me a call or someone from the Nesvik team. Happy to announce my brother, Joe Grisafi, now works at Nesvik Trading also. So we're growing the group. We got a good group of people down there. Myself, Joe, Clayton, who you know, and we got all registered brokers ready to talk to you.
Tommy Grisafi with Nesvik Trading and Ag Bull Media. Always good to chat. Have a great one, sir. We'll talk to you again soon.
Thanks, Jess.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.